You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the old OB, what the cool kids call the Option Block, your bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from this fine network. Hope you guys are enjoying the slew of content hitting you yet again this week. Remember, if you like what you hear, keep those reviews coming wherever you listen to our fine programming there so new folks can continue to discover the programs. Of course, if you want to join us live, the Option Block goes live every Monday and Thursday, noon Central, 1 p.m. Eastern, via the Mixlr link. You can also head on over to our website to see when all of our shows go live throughout the week. That same link, mixlr.com/options-insider, should get you there for all of our shows throughout the week. And of course, keep those questions coming too. We do love to hear from you guys. Let's see who we're hearing from today. First, let's head on out to the quiet, the tranquil, the seemingly idyllic shores of the Fox River. Threw you a curveball, where we are joined once again by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here from the shores of the Fox.
There you go. From the shores of the Fox. No clam piracy, at least that I can hear, on the shores of the Fox. You guys are safe there. But if you want to talk clam piracy, we have to go a little bit farther out, all the way out to the shores, the far eastern shores of these here United States, to a quiet little principality known as Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back to the program, sir.
It is good to be here. Good to be here. Things are going on well. Okay, there was some clam pirating yesterday. The weather is nice. We are in Indian summer, but it looks like it's kind of getting gray and colder and stuff like that. So I don't know how long it'll last.
We shall see. We were at 75 a couple of days ago. Now it's down to about 32 again or so. So more seasonably normal. Down about, almost 40 degrees in the last few days. So that's what we expect this time of year as we head right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And it's a color a lot of you may not be familiar with because pretty much for the better part of the last week, it's been naught but green on the screen post-election. And, of course, coming into this week post-vaccine news, it was just all green all the time. Today, finally taking a bit of a break from that green. Market's taken a bit of a rest. The first real major one post-election and indeed post-vaccine announcement this week. The S&P off a little bit north of 1%, about 1.1%. The Dow closing in on off 1.2%. The NASDAQ off a little more than 0.5%. Of course, the S&P, even with today's sell-off, still north of that 3,500 level at about 30-odd out there coming into the start of the show. That puts VIX cash up a bit since our last show, about 2.5 handles. Coming into showtime was right around 25.25. Again, puts it up about 2.5 points. But again, also well shy of that recent high we saw out there of close to 41. About 40.70 out there. Not too long ago. Seems like a distant memory now, but not too long ago out there. VVIX, a.k.a. the vol of vol, also ticking back up as we're seeing some more volatility of volatility. Go figure. Funny how that happens. At about a 117 coming into showtime, that puts it up about 8 handles. But again, also well shy of its recent high of right around 155. A VXX actually broke through the 20 handle. And now starting to threaten it again from below at about a 1975 at the start of the show. Puts it up a little over a handle, about 1.25 points from our last show. Of course, that one topped out around 27.75 recently out there as well. And the newest addition to the vol landscape, a.k.a. vol Q, coming to showtime is at about 27.25. Puts it up almost 2 points, about 1.75 points from where it was this time last week, but also well off its recent highs of right around 40 out there as well. So that's where we are to start the show here today. Let's go around the horn the way we started. Let's go out via the magic of telephone to the unklest of mics once again. Mr. Uncle Mike TOSAW, sir, what is lighting up your tape on this finally a break from the Uncle Mike type of days, sir?
Yeah, it's something else. The thing that we started off rather flat today. We were down a little bit, and then we were flat for a while till about maybe 45 minutes ago. And it looks like the Fed made some news and saying that the recovery is going to take a long time, and that the vaccine is one of the biggest problems. Or the Fed said something that I felt was very obvious that we already knew, but for whatever reason, we decided to sell off on it. So, with that, we're down roughly 1% on the day in the S&P, so can't really complain too much after the big rallies with which we've had. We're at similar levels as to where we were a week ago when we did this broadcast, in that we're probably right around on the S&P. We're just right above the 3,500 mark, and pretty much everything that we gained on Monday with the vaccine news is that's all gone now for the most part. And so we're right about where we were a week ago. And so what we're seeing out here at this point is we're going to see if this rally or this euphoria with which we felt from the post-election is for real, so to speak. And if it is, then I think we'll rally, of course. And if not, then we're either going to stay the same or go down. I understand I just stated the obvious. But now we're going to kind of get into things from the standpoint that, yes, Trump is still going to fight for the election, but let's be honest, the odds of him winning are fairly low, or very, very low, I would say. But he is still going to fight. But I think this is different from Bush-Gore 2000, because Bush-Gore 2000 was a matter of 300 votes, if I remember correctly. This is several thousand over many states. So I don't think the odds, whatever side of the political aisle you're on, I don't think the odds of Trump being president in the next year, I think there's around slim and none. So we will have that. What's going to be interesting, though, is what does Trump do in his lame duck period? Is he going to do some things to change the economy or put in some last-minute executive orders, whatever the case may be? I think that's something that we're going to need to watch for. The other thing that I'm noticing on here is that we did have a major rally in financials on Monday, and for the most part, it held when the rest of the market did not throughout the week. Now, financials, and I'm referring to XLF, is down today, roughly 2%, but the major rally with which it did have, a lot of it is still there. So financials are holding up, and it'll be interesting to see where things go from there. That is what I'm seeing right now, and that's what's lighting up my tape.
Thank you for that, Uncle Mike. We now turn our attention back to those sleepy shores of Maine. Mr. Rock Lobster, Volman's had a lot to parse over the course of the past week and change since our epic election night spectacular. Hopefully you guys are enjoying this. I think most of them are on. If not, there should be maybe one or two segments left. We actually broke that special up into smaller bite-sized, roughly half an hour segments. You don't have to sit down and mainline the whole 4+ hours in one go. So most of those, and not all of them, should have hit the network by now. If not, the last couple will be hitting soon. So hopefully you guys are enjoying that out there as well. Listeners, Mr. Rock Lobster, sir, what has Volman been fixating on this week?
Well, I noticed I noticed earlier in the week we got this kind of so when you have these big rallies, when it's crazy as they were last week. What did we open, like 365 SPY or something like that on the vaccine news? What we didn't get, we got like the rally is so big that vol, it had a hard time coming down. Now, granted, we just had basically 2 vol events. Like the fact that a vaccine is coming out, that was good, positive. And that jacked everything up. And there was some algo euphoria, I guess. And then the reality is, okay, it has to be stored really cold. It's going to be hard to distribute. But it's definitely, I viewed it as kind of the light at the end of the tunnel. And I agree with Mike. Ultimately, Donald will probably, he'll probably end up, he'll be leaving because legally he won't be the president if the Electoral College certifies, votes, casts all their electors for Joe, and then, he's not the president anymore on inauguration day. That's just the law. So I don't know if there's trouble there. Where I did see a kink in the curve a little bit, I thought was around the Georgia elections. It's 50-48, which means potentially Kamala Harris could be the tying vote in the Senate. The House and the Senate is very tight. I mean, the House got really close. So I think there's a little bit of nervousness there on what happened to the Senate. It was just all one party. That's what I would just say simply is that is a known vol event at this point. It's a thing that could happen, and it's now hard for that cycle of vol to go down. Because I don't know if everybody would view one-party rule as bullish. I don't think one-party rule has ever been great for this country, to be honest. I don't think it's good for any country. I think it's bad, quite bad, to be honest. I can't. Either side, they get in there and they just kind of all lose their minds. So as far as that is part of a vol event. So when you see that tends to put a lid on the market rally. When you see, and I mentioned that, the vol man mentioned that, so it kind of stops the action, at least short term, because now everybody's like, the market loves being able to see far into the future, like everything could be great, right? We're going to have these vaccines. I heard also that like AstraZeneca or their partner has come with their vaccine is showing a huge promise as well. The Russians have their vaccine. So it looks like this is going to happen. However, now there's talk of lockdowns because everybody's freaked out because the numbers are so high. So again, we went from kind of a steadier, better news to not as good news, and just the market has not taken that very well. So, as it looks right now, so a good thing to look at if you're a watcher, like the 30 calls for next week in VIX. Are they going to get a solid bid? Are they going to really rip? So is there some buying there? There was a lot of put buying in December. That slowed down. All those puts started to kind of evaporate a little bit, all those downside puts. That easy euphoria kind of left. To be honest, I still think it could be there. The December cycle, it feels like a very long time away, even though it's just a little more than a week at this point, or I'm sorry, a little more than 5 weeks, or a little less than 5 weeks. But I think in the scheme of things, it's a big 5 weeks as far as more vaccines, how we're dealing with this, with all of the cases. I think what hasn't been reported very well is the hospitals and doctors have done a really good job figuring out how to deal with this. So those are like the currents, right? And there's the uncertainty over what Donald will do. It's in the press all the time. So this drives a lot of the, the bots and all that kind of stuff. So from a vol point of view, what I think is difficult, I think it's tough. It's a tough trade. So if you're looking for vol for a hard direction, I don't know how much you're going to get. I mean, the vol could rally for sure. If people start to really worry, we could go a little higher. But I don't think it rallies. Like, I don't think I see 40, I don't see that kind of panic unless the big question mark, right, is how far, because there's been some balloons dropped about shutting down the U.S. economy again, like the whole thing for 6 weeks. I don't think the market's going to like that. I've seen those balloons. They've come across several times. And the market is not going to like that. That could be, I don't know, what is the S&P 500, 3,500? You could see 3,100. You could see that would be a limit down day, in my opinion, if they decide to try that again. And I think there would be a lot of strife and just basically a lot of unhappiness. So I think those are all negatives. And to be honest, we're back to the ledger of like, where are the positives? We don't have that many positives right now. So you're kind of sitting on it and waiting for some positive to happen. And that's where we find ourselves currently. So it is I think the vol trade is a tougher trade right now. Everything I have on is basically looking for less sharp downside, but potential spike upside. That's kind of how I have, because I kind of just, all I do is I'm sort of always long vol somehow. And I'm just kind of skewed a little bit how long or how short I want to be. And right now, I'm leaning like a touch long, basically, with the downside not aggressive in any way. Because we keep getting to the bottom of zone 4, breaking into the top of zone 3, and stopping every single time. And I've been fooled all year long thinking that this is the big one, like Fred Sanford and Son. And it doesn't happen. We don't break through. It happened again, right? We could not keep in zone 3. We couldn't keep in the third quartile because, people got nervous again. And I don't blame them. But that's what we got. So again, a long-winded thing about vol, but it's very, let's just say for right now, it's in flux. I guess we could say that. It's in flux. I don't like it as a very hard trade, though, one way or the other. Hard direction up, hard direction down.
Speaking of hard direction, market seems like it's trending in a little bit harder direction to the south. I wonder if we'll break 3,500 in the S&P before the end of the show. We'll keep an eye on that, listeners. Let's keep an eye on what's lighting it up right now. As of a few minutes ago, VIX doing decent paper at about exactly 250,000 contracts. Of course, that ADV has ticked up quite a bit over the better part of the last month. It's threatening 600K now. It's 581,000 contracts. That's a far cry from when it was 330 not too long ago. The SPY closing in on 2 million, about 1.9 million contracts on the tape as of a few minutes ago. The ADV, 4.05 million, so not even half of a day's worth of volume out in the SPY out there right now, which is kind of interesting given we are seeing some movement out there today. The S at about 450,000 contracts. The ADV just a tick north of 1 million, so not even a half a day's worth of volume out there either. The Q's 538,000 ADV, 1.06 million, so right around half in Q land, and the small caps, at least IWM flavor, at about 456,000. The ADV just tick over 600K, 601 to be precise. Let's see what's lighting up our individual names. A little bit more realistic volume, even though it's still pretty heavy to break into the top 10 today. Usually it's around 140, 150 or so. Today, 206. That's pretty impressive. That gets you to AMD, a perennial top 10er. Good for number 10 today. Number 9, American Airlines, 208. Number 8, Snap, still in the top 10 there at 217,000 contracts. Number 6, number 7, this is a newcomer to the top 10. Kind of speaks to the theme of the top 10 today. This is Plug. This is a hydrogen fuel cell system developer out there. They're at 222,000 contracts right now. Even though they're not having a huge day, they're only up about 2.5%. It's a decent day. They're about $23 stock, but not exactly blowing the doors off. Yet they certainly are from an options perspective. Number 6, Zoom, a perennial top 10er now, 223,000 contracts. Number 5, Baba, once again, 236,000 contracts. Number 4, Bank of America, 263,000 contracts. Now we jump up, takes all the way up to number 3 to get over 300K. That's Tesla, 358,000. You may be saying, Tesla, number 3? What? Yes, exactly. Once again, Tesla bumped down to number 3. Number 2 may be even more surprising to you. Number 2, Apple, 928,000 contracts. Usually that's good for number 1 easily. It's closing in on 1 million contracts. Apple does some paper these days. I'm not sure if you're aware. What, pray tell, what could possibly unseat both Tesla and the fruit company from the number 1 spot in the options most actives today? Well, if you guessed NIO, you are correct. This name, from an options perspective, forget everything else. I know the underlying is dubious in the eyes of many. It's been moving quite a bit, and it is certainly generating a heck of a lot of paper. 1.15 million contracts right now to unseat both Apple and Tesla out there. So, interesting stuff afoot. We'll have to tweet that out there. NIO toppling Apple and Tesla from the number 1 spot. How dare it? How dare it out there? It's been climbing up the ranks slowly but surely over the last couple of weeks. Let's see what's lighting it up from an earnings perspective. You like to focus on some smaller names. Forget about Washington or all the other madness going on with the vaccine. Let's focus on some individual companies for a change. We had a lot of them popping off again this week. We are still in the throes of it. Monday, of course, Mickey D's. I had a delicious McDonald's breakfast this morning, so nice to see that's still available in some areas there. We had Canopy Growth and Beyond Meat on Monday. Tuesday was Lyft, Rocket Company, so the parents of Rocket Mortgage, as well as today, after the bell, big one today. We got Disney after the bell, Cisco, cover your ears, Uncle Mike, Applied Materials, all those big names after the bell. Tomorrow, we got DraftKings, and luckily for you listeners, we happen to have the earnings move reports for all those names. Let's break it down here. AMAT, let's go there first. 71.16 as the time of this report. They were pricing in about $3, and in the past they've moved about $3. So not a lot of surprise, perhaps, being priced in at least to that straddle. Cisco, 39.33. They were pricing in $2.16. In the past they've moved $2.22. So far we're 2 for 2 in terms of being almost exactly in line with their previous movement. That's kind of interesting. Let's go out to a big dog. Let's go out to Disney. 137.82. They were pricing in $5.42. In the past, get this, listeners, $3.59. So a little bit of extra juice going on in Disney. I know they have still a lot of their elements of the Disney empire are in flux. Some of the parks still not open. I know ESPN are just announcing some pretty major layoffs out there. So there are some elements of the Disney machine. Of course, they still can't put any of their big tentpole movies into theaters. So you think all of those will be weighing on the stock. The stock's still well north of where it was not too long ago at the 100 level. So interesting stuff out there. And we got DraftKings tomorrow, 41.64 as of the time of this report. They were pricing in $3.56 in the past. $4.46 is how much movement they've delivered. Now, obviously, kind of a short history with DraftKings, but still a little bit light on the vol. Let's see how the season is shaping up from an overall vol perspective. Let's see. So far, yeah, it's looking pretty similar to previous seasons in terms of right now. It's at about a 71% in terms of how much vol was priced in versus how much is being delivered. And let's see. Week 1, 67%. Week 2, 56%. Week 3, 56%. Week 4, ticking up a bit, 87%. And then the average of all that is the 71% out there. These numbers will continue moving, continue evolving. So make sure you stay glued to theoptionsinsider.com. Hit those options news and articles tab there, top right corner, to begin your journey to the dark side of all things earnings. Speaking of the dark side, really quickly, some interesting nuggets coming across. I think this is from an analytics firm called Ortex. And they were just crunching the numbers on how short sellers have performed since the first, particularly that period from the 1st to the 9th. I think you can probably guess, probably not too well. And their analysis, obviously, they just added up all the short interest on these names and did a little bit of quick multiplication. They estimated short positions have lost about $5.5 billion since the 1st of November, with some of the worst losers out there. Carnival Corp, off about $500 million for short sellers. Expedia, $382 million, I should say. Booking Holdings, $345 million. Royal Caribbean getting a bit of a trend here, listeners, $320 million. Visa, $316 million. Then American Airlines, $275. Wynn Resorts, $253. Norwegian Cruise Lines, $251. Boeing, $242. And Disney. Short sellers getting walloped a bit on Disney there as well, $236. I'm assuming the vaccine euphoria has lifted them to the prospect of opening all their parks again. Either way, and of course, releasing their movies again, too. There are some winners, though. There's some companies have made some money out there, not the least of which Zoom closing in on a billion. $999 million in terms of profits for short sellers. Wayfair, $936. Tesla, $460. Teladoc, $457. Sea Limited, we talked about them in the past, $449. Alibaba, $448. Amazon, $420. Netflix, $416. Peloton, $375. And round out their top 10 biggest winners for short sellers, Square, with $364 million. Now it's time for us to keep on rolling right on into our next segment. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. Let's get weird. Let's get wild. Let us unleash the Eye of Sauron and see what it fixes its gaze upon today. First, looks like it has fixed its gaze out there, and I believe this is the newcomer. This is AES, which is AES Corp, ticker symbol appropriately enough, AES. This is a power company based out of Virginia, but they operate in a bunch of countries around the world here. They are, let's see, $20.62 off about right around $0.75 of a buck, or a little over 3%. This is the name that a year ago was trading $18.06, so almost about $2.50 shy of where it is right now. It trended up to about 22, actually no, it trended up about 21 and change right before all the madness happened. And then it sold off in February into March, got down to $8.11. Then it kind of vacillated around there for a while, but slowly started trending north. It had a brief apex of about $15 on June 8th. Then it sold off again down to 12. Then it slowly rallied again, one of the few names to actually surpass its June 8th high, and got back there by September, October, and then by late October was trading $20.65, all the way up to a recent high of $22.32. Before selling off down to where it is right now at $20.62. Let's see what our Eye of Sauron found out here. Looks like Mr. Rock Lobster maybe a bit of an upside call roll, so perhaps someone trying to keep the love alive, or more likely, because it looks like they're doing more size, I should say, on the second leg. Maybe a bit of a house money roll. Let's see here. First off, our Eye of Sauron found 10,000 of the Nove 20 calls going up. Right off the bid, they were a 90-cent bid. It went up for 95 cents 10,000 times on the Philly. But it was marked spread, so we dug up the other leg there, and we found 10,000 as well of the D's 22s. Going up for the old double, 55 cents, lifting the offer on the Philly as well, 10,000 times. So that seems kind of straight up. Okay, 10,000 lot, maybe a bit of a roll. Nove out to D's, get a little bit more time and a little bit upside as well. Usually a sign that the trade has worked in your favor, and we are indeed north of the 20 strike as well, so probably a good chance that it did. Then we dig a little more. You see actually more going up on that D strike, 5,000 lot, another 5,000 lot, total of about 22,000 on that D leg. So now we're talking almost a bit of a 1x2 and change roll out there to D's, which is also usually a sign. When they have more money to put to work, usually that means that first leg worked out pretty well. And sometimes they keep it, sometimes they just keep the same ratio, and they end up pocketing the difference out there. Also worth noting, these D's calls, obviously, a wee bit cheaper, so that level of premium also playing in. It's not quite half, but it's pretty close. 95 cents for the Nove calls, 55 cents for the D's calls, so that lower level of premium also probably playing a role. They said, hey, we got some money to burn. Let's buy more of the D's. But they obviously went above and beyond. They didn't just buy the exact ratio. They bought around roughly 2.2 D's calls for every one Nove call. So Mr. Rock Lobster, A, do you think this is a house money roll? And then B, if so, what do you think of this kind of ratio type of call roll, sir?
Well, I it's always hard for me just to agree with you right off the bat, because why would our listeners tune in if I just chime and parrot everything that you say all the time? But I have to say, this does have all the smell.
Mark is always right.
See, TOSAW knows. TOSAW learned a long time ago. He's a smart man. You can always tell a smart man because he agrees with you.
Look at TOSAW.
Thank you, sir. You are always right.
You know what he sounded like? Like the Wizard of Oz when he was behind the curtain. Don't pay attention to the man behind the curtain. However, I mean, if you look at AES, though, right? Boring Power Company, thing was $12 in June, and now it's $20. So I wonder how long this house money roller has been doing. I mean, when do you normally buy? Like, you're closing your 20s. When would you normally go out another month and buy another 10% out of the money call in a utility stock? Think back, Mark, years ago when you had a utility trading in your pit. You're like, wow, when am I ever going to make money taking calls I just made money on, and then going and buying another 10% out of the money call down the road? Like, whoever said that to themselves? I don't think anybody ever did, because utilities don't move. So maybe something's afoot here, but this thing is, not many utilities go up $8 either in 6 months. So
worth noting, I did a little extra digging while you were talking. Looks like he opened that Nove leg back on October 8th when these options were trading for around 68 cents. So he made about 30 cents on those. So not bad.
Not bad. And I think he's going to do it again. So, I do think it's house money roll, or he's not spending a little bit. It looks like he's doing 2-to-1, but what the heck, since, who wants to own a bond when utilities are yielding like, 4 or 5% or something like that? So, this company is paying 52 cents a year. That's a pretty good yield. So I guess they don't want the yield. They just want the capital gain, which is kind of oddball, but there it is. So that's what we got.
There it is indeed. Also a good subtitle for this episode, Uncle Mike is a wise man. Let's just put that out there for all to ruminate on as we pick our next victim here in the Eye of Sauron. We're actually going to go back. Mr. Rock Lobster, I should say. You're always asking for the Wayback Machine. Here you go. You're getting the twofer today. So you should be happy. First off, your old friend, the Line in the Sand puts from your cohort, Mr. Meatball's favorite name to hate. This is Darden's Restaurants. We're dialing the Wayback Machine back to September 24th, listeners, to some what looked like Line in the Sand puts here for Darden's Restaurants. At the time, he profiled, looks like a 2,000 lot of the OC 90 puts going up for $255. They were worth noting for a couple of reasons. First off, they were aggressively below the bid. The bid was $270, so someone was really crushing these puts, trying to get them up. Of course, they went up late, so that also probably has something to do with that. At the time, DRI stock, which, of course, ticker symbol DRI, listeners, was about $93.92. I won't tell you where it is right now. That's a bit of a spoiler. And even though these expired a little while ago, these are OC puts. That was the day, by the way, of earnings, so that's also probably why some of those prints were in flux. Stock was moving around quite a bit, paper flying fast and furious on earnings day. And looks like, Mr. Rock Lobster, these puts worked out. The stock closed at $98.94, and this guy looks like he pocketed right around $500,000. Also, before that, we also profiled what we thought was maybe a strangle. That was on the 14th of September. This one's a little bit murkier. We profile a 2,700 lot of the OC 85.95. Seemed like a strangle. Paper selling the puts for $390 and probably the calls for $365. Again, a little bit less intuitive on this one, or $365, I should say. And the stock again closed at $98.94. So just from a straight up analysis of strike prices, you could say he did all right on that strangle. It's a little bit murkier when you look into how they took this thing off, if indeed they did. There was some paper going on. The puts were obviously still open, not going to close out that leg going into expiration, but the calls had a little bit more funkiness going on. So it's kind of hard to tell exactly what they did with the calls. I'll put that as a probable winner given where the stock went out, but a little bit less intuitive from an options perspective on the call side. But definitely probably a winner here on these Darden's Restaurants line in the sand puts. Looks like Mr. Rock Lobster, a twofer of probably winner chicken dinners in Darden Restaurant. Would you concur, sir? And do they sell chicken? I don't know.
I think we do have a winner chicken dinner on this one. What do you think? I think that's the line in the sand put has done it crazy. We've had a crazy year, but it's done really well. To be honest, perfectly honest, it's making money. So I think yet again somebody's getting themselves a nice Ferrari with their line in the sand put money. Which of course, what all line in the sand put people do, they buy Ferrari, another Ferrari with their bucks.
I think you referred to in the past as the girlfriend's Ferrari money. So there you go.
You have to be careful these days. It could be the boyfriend.
Exactly.
Ferrari.
A lady can buy her boyfriend a Ferrari too. So what's wrong with that? We're in an egalitarian world. Someone wants to buy me a Ferrari. I don't care what their gender is. I'm approving of them. So. All right. Let's see. We got one more. In the Wayback Machine for you, Mr. Rocklops. This goes to everyone's favorite name. This is Six Flags. They have not really opening much this year at all because they really couldn't. Six Flags, of course, the amusement park company. Let's see. The ticker, of course, 6, appropriately enough. I won't even get into where the stock is. We'll break this down in a little bit. We profiled them back on September 21st. At the time, what looked like a collar went up, Mr. Rock Lobster. It was a 7,000 lot collar. Someone buying the October 20 puts for 80 cents. And also looks like selling the calls pretty much 7,000 times as well for 55 cents. So doing that whole thing for a nice quarter out there. I'm trying to see where the stock was at the time. And here we go. The stock was at $22.35 when all this madness went up out there. So collar stock $22.35. They bought the 20 puts. They sold the 25 calls. So right around pretty much almost equidistant to where the stock was on both strikes, paying a quarter to do just that. And it looks like Mr. Rock Lobster, and by the way, they did have earnings, but earnings were after expiration, so not priced into these options. Looks like they took this one off pretty quickly. This print went up on the 21st of September. They closed the whole thing pretty much on October 1st when the stock had dropped a bit. So go figure. The collar kind of worked out a little bit for them. When the stock was $19.94 when they took this off, they closed the calls out, looks like for around 15 cents. And looks like they closed the puts on the same day as well. They also took those off for, it looks like around, I have the print here. Took them off for, it looks like they made around 40 cents pretty much on each leg, Mr. Rock Lobster. So 40 cents on the calls and about 40 cents on the puts. So picking up, close to $500,000 or so on that collar. But then also you have to figure they did this collar probably against stock. The stock is the primary leg of the collar after all. So if they're doing 7,000 shares, or I should say 7,000 contracts, probably 700,000 shares. And that stock dropped close to 2.5 points during that period as well. So they lost about $1.75 million on the stock, even when they made around $500,000 on the collar. So they did all right. They certainly did better than if they just owned the stock and rode it all the way down. But still, perhaps not quite the, shall we say, home run, Mr. Rock Lobster, that some might envision. But then again, you could also say this person envisioned some downsides while they put on the collar, and they did the right thing. They took it off. They did something. So I guess we can give them a feather in their cap, sir.
We could give them a little feather in their cap. But I think if I don't know, did they actually close the stock or they just
probably it's a paper loss. I'm assuming if they have the collar on, they're probably not closing the stock, I would think.
Right. Well, I mean, it looks like Six Flags is trading $26.
Yeah, the stock is looking much better now. I was going to say that. They're up to 27.5 right now. So if they held on to it, which they probably did, which is, again, a good argument for the collar. It mitigated them against some near-term downside, and then they held on to the stock, hopefully, to take advantage of this nice rally, in which case they're back another 7.5 handles from where that was. So they're looking good.
Yeah, I think ultimately when you have a hedge on a position, TOSAW could talk about it. He's doing a strategy block one of these days. But, I mean, you have to use it. You got to take the money, right? Because you have some part that's not making money. But as long as you can book a gain on something, it makes your loss very small, or maybe you have a small net gain. But, if the stock just goes right back up or doesn't do anything, you put on a hedge to use it, essentially. So don't forget that. You gotta take the money at some point.
You gotta take the money at some point. We have to answer your questions at some point as well. Luckily, it's Thursday, and it's time to do just that.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block, the portion of the show where we get weird, we get wild, we answer your questions, which are often weird and wild as well here. Speaking of which, we had an interesting one. We don't get political here on the show. If you listened to our election night special, we avoided discussion of the underlying political issues out there. But an interesting thought occurred to me over the weekend, and clearly it resonated with a lot of you as well. Looking at the numbers in the early run-up, of course, it was a little bit undecided earlier last week. As the week progressed towards the end of the week into the weekend, it seemed like it was trending firmly in the Biden camp, which made me wonder, obviously the pandemic is the big driving seminal force of the year that is 2020. It has changed just about everything. But I wondered, take that out of the equation, as difficult as that may be. Take that out of the equation. Let's say we had the same contenders vying for the throne this year, Trump and Biden. Do you think the outcome would have been the same, or do you think Trump would have held on? I know it's hard to divorce your political beliefs from, what you think the outcome would be, but try to do that. Try to think just purely from an empirical perspective, much as you can about a subjective issue like this, and see what you guys think. And I gave you guys 3 choices. I said, yes, Biden still wins, no, Trump wins, or I'm done with politics. And overwhelmingly, almost 57%, 56.7% of you said, yeah, you think Trump probably still wins if there is no pandemic. Only 29% saying Biden wins and 14.3% saying you're done with politics. It's hard for me to argue with that. It does seem like the pandemic was the massive narrative shifting event throughout the entirety of the year. And you guys clearly think maybe it would have been a very different outcome if we did not have that massive event occurring this year. I don't want to get too deeply political. I'm just kind of curious. Uncle Mike, what are your thoughts on this, the results of this poll? Do you agree with it or do you disagree?
Well, I disagree because I think everyone should have said, I'm done with politics.
Well,
that would have been my vote.
That's why I put that in there. I expected that to be like 85%. But no, less than I thought.
No, but I would say that as close as the election is, I think Trump could have pulled it off if it wasn't for the coronavirus. I think that we would have – the market's been held up by a lot of the stimulus and a lot of the $1 trillion that was basically just printed last March. And so most of the time when the market is up in October, the incumbent does typically win. And I think that if we wouldn't have had the pandemic, I think that we wouldn't have needed the stimulus money or all the PPPs and all the other money that was given out. And I think the market would have held up. I think we would have had a good year this year. And I think just because of that, combined with the economy where it is, I think overall Trump would have won, but I definitely think it would have been equally as bitter and equally as close. But I think that would have been the one thing that could have put him over the top.
Mr. Rock Lobster, same question for you. Do you agree with the results of our poll, or do you take a counter view, sir?
Well, historically, he's market up, economy good. you're going to win. So I think without the virus, it would be tough. It would be a little. It would be tougher to attack his record because things would probably be flying. So. But he is. I would just say he is cantankerous, and that does put a lot of people off. So I don't think it would have been a landslide, but I think on balance of how close it is with the virus, he probably would have won. Probably indeed. You guys certainly think that would have been the case. We got all kinds of interesting feedback here, like this from Carlos. Carlos says, "Hi, how's it going?" Well, hello, Carlos. I hope all is well. I have some cool information that might interest you. Your podcast has good performance in the rankings, and he goes on to list a variety of countries and how our podcast is doing. In particular, we're number 6 in the investing category in Jordan. So we're huge in Jordan, apparently. Number 15, only 15 in Guatemala, 16 in Bulgaria for investing, and number 12 in investing in Turkey. Well, thank you, Carl. I think it turns out he was pitching some sort of podcast ranking service, but still, interesting nuggets nonetheless. Who knew we were so big in Jordan? And still pretty decent in Bulgaria. Who knew they had an investing category of such depth in Bulgaria? But they clearly do. So, given the fact that we don't translate our content into the native tongue of any of these countries, kind of interesting to see that we're anywhere near any of the top 100, which is kind of strange. But hey, we'll take it. Thanks for sharing that, Carlos. All right, Mr. Uncle Mike, got one here for you. This is from our regular listener, Mr. Tony Weber. He shared with us what he thought was an interesting SLV options strat, and he shared a link to a CNBC options action episode. They had an analyst on talking about SLV. I think at the time SLV was trading about $24, and he thought SLV was poised to break out to the upside, so they asked their options analyst there what they thought would be a good trade for that, and he recommended selling the Jan 21 put for $2.10 to capture what he termed to be elevated premium for those Jan options. So, Mr. Uncle Mike, what are your thoughts on that trade? Do you agree with the outlook that SLV is looking up? And if so, what do you think of this Jan 21 put for $2.10, sir?
That's definitely a lot of juice when you think about it. With SLV trading at in the low 20s, the Jan 21 put, if you're able to get that, that's about a 10% rate of return on just selling a put. So that's definitely not any premium to sneeze at. But with that, if premium's high, it's high for a reason. If people are willing to pay that much to insure themselves on downside of SLV, I just think it's cause for concern along those lines. Where I'm at right now with SLV is that I had a collar going on it most of the year. And then a few months ago, we just got to the point to where I couldn't really roll up anything or couldn't really do much more with it. And it was in the money. And so what I did was I got out of it altogether and then just sold a put spread with similar strikes of where the collar was. So that way I had a little bit more margin maintenance to play with. Because on that longer term collar, I had used almost all of client account money to make that thing work. So I think overall the cost of doing all that was roughly a nickel, which wasn't bad. And so I still think that there is some more upside available with SLV because I did also buy a call. I changed the strategy from a collar to a hedged risk reversal. Same concept though, but on there, if we do have chaos in the next few weeks, and then there's still a lot of chances that we could have chaos in our society, meaning we have a contested election, although my odds of that being taken seriously is still roughly 100-1, but you never know. We could have more chaos with government lockdowns and shutdowns and things like that. If we have a lot of those things happening, or we just give out another stimulus money, and we're printing more money, devaluing the dollar even more. If that's the case, then we could have reason to believe that there's upside with silver. But I think, once again, the odds of those things happening are slim. And if they do happen, though, silver could have a lot of really nice upside. But if I'm wrong, if those things don't happen, silver's still a nice holding to have, I think, with a portion of your portfolio.
Well, since we're talking metals as a portion of a portfolio, you might as well jump to this question that's kind of similar from Mr. Dashley. Mr. Dashley wants to know, do you think buying a call option in a precious metal like gold or silver is sufficient exposure for diversification? How far out should I go with my calls? Thanks for reading. So kind of a flipping of the script of what we were just talking about. We were just talking about selling puts in SLV. Now Mr. Dashley wants to know if he should be buying calls in SLV or GLD or perhaps in the futures options themselves as well. And if so, well, two questions. First off, is that sufficient to diversify him in the old sense of, your 60-30 and maybe 10 portfolio? And then B, how far out should he go? Mr. Uncle Mike, since you're our token precious metals guy, I'll start with you, sir.
Oh, always good to be a token. Well, maybe since I'm a token now, maybe Andrew's the one that's always right, but I digress. Anyway, with all that being said...
You're the token until the mini metals come back on the show.
Got it. I can't compete with the mini metals. But to answer the listener's question, it could be. If you're buying calls in silver or gold, it just depends on what level of leverage that you're using. And so if you are buying nothing but calls, where normally with 10% of your portfolio, then no, I think that's too much because you're leveraged. If you're maybe of that 10%, maybe you're taking 1 to 2% buying some calls and then maybe hedging the time decay by creating spreads, things like that. That might be a little bit more reasonable with it. So I think that's kind of the main thing with which to look at. The other thing I would consider on this is that if the money is inside of an IRA, it wouldn't really make a difference if you use GLD, SLV, or futures options. But if the money's outside of an IRA that you're looking at, you may want to consider investigating futures options because by doing that, you might get the 60-40 tax treatment on them should you make money on those options. So those would be the things that I would consider if you are looking for a portfolio allocation to see if it makes sense for you.
Mr. Rock Lobster, anything to add there, sir?
Oh my gosh, it was such a good answer. I don't know. As far as I think the best way to use options is in that way. So if you with a couple $100, you could have the control over what's 100 shares of GLD is $17,000 right now. So if you think about it, by $300 or $400, $500. You control $17,000 worth of underlying, which I think is the best reason, to use options in the first place. So I don't think that silver put sale was a bad idea, to be honest. But I think gold will help. So one thing I do when I talk about portfolio, let's say hedging with students, is how much money do you need do you want your hedge to make? So normally stocks don't go to zero or the SPY doesn't go to zero. You just want that hedge to be able to make enough money, and are you going to actually close it and take the money and go do something else? So you have to figure out how much money you want to make before you actually go buy something. So if you think of it like that, it's a lot easier. So if you need your gold exposure to make you maybe $5,000, you know about how many calls you need to buy, maybe a 5 lot. If gold really pops back to GLD to 190 or 195 or really takes off like that. So you got to ask yourself how much you want to make with your hedge, and that way it will help define the trade you need to do to make that happen. There you go. That's what I'm adding.
There you go. That's what he's adding. As we roll on into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we do just that. We go around the block, tell you what we're watching on our trading screens throughout the rest of this week into the weekend. Let's do a real quick check and see, because I asked at the top of the show, will we break 3,500 in the S? Doesn't seem like we got there. Seems like the sell-off is pretty much right around the same level as where we started the show. Seemed like it was starting to exacerbate for a wee bit, and then looks like now taking a bit of a break But there's more show to come, listeners, so stay tuned for TWIFO and beyond if you want to keep an eye on these markets with us. But before we do that, let's go back around the horn. Let's start with the rockingest of lobsters, Mr. Rock Lobster, sir. What is on your radar for the rest of this week, at least until we can gather here together tomorrow on Vol Views?
What am I watching? I'm just trying to see if this VIX curve can shake loose. It's pretty flat, and all of a sudden, all the good feelings we had seem to have petered away, so to speak. Just gone.
Petered away indeed. Mr. Uncle Mike, I know your good feelings never peter away, sir. So what are you keeping an eye on for the rest of this week, even though I know you're going to be holding your ears after the close because CSCO has earnings?
Yeah, Peter, pumpkin eater. That's what I have to say to that. No, I think that 3,500 is definitely a key number with which we're looking at for the SPX. Curious to see if we can hold that. Also watching everything macro at this point, or I should say everything with election chaos. I think that it's doubtful that anything major is going to happen, but if something major does happen, then it could get really crazy. And speaking of majors, the Masters is on this weekend. Enjoy, folks.
There you go. You know he likes football. You didn't know he liked golf, too. There you go. The many layers of Uncle Mike. A very bright man, if I do say so myself. All right. That music's going to do it for us today, listeners. But before we go, let's go back around the horn, check in with each of my cohorts. Let's start with the Uncle-list of Mikes. Mr. Uncle Mike, sir, folks are intrigued. They want to, obviously, they have a lot of questions about options and SLV and GLD. If they want to contact you with such questions, where should they go? What should they do?
Go to stcharleswealth.com. You can click on my website to get a hold of me at any time, whether it's through email or phone or whatever. All my information is there. Would love to have a conversation. I've talked to many of our listeners through the years, and I'm always looking to talk to more. We got the best listeners in the business.
That we do. Check him out over there, stcharleswealth.com. And Mr. Rock Lobster, if folks are intrigued, they want to reach out to you, where should they go? What should they do?
Go to optionpit.com, go to memberships, and or you can go to our Slack or Drift question and answer on our website. If you have questions, or you have questions for me in general, or Mark, or Alicia, or any of our team, just let us know. And we try to get back to you within 24 hours. As far as, we won't tell you what stock to buy, but if you have questions about Option Pit, we'd be happy to help you.
There you go. Optionpit.com is the place to go. Head on over there. A little pop-up with the Greasy Meatballs face will greet you. So stay tuned for that, if for nothing else. And stay tuned for us. We'll be back in exactly half an hour live with a little bit of the old TWIFO in between. If you're listening live, you'll get some fun stuff piped in there for you. Of course, we'll be back tomorrow, noon Central, 1 p.m. Eastern, for the old volatility views. Then it all kicks off again on Monday with another episode of The Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.